Did you miss the opportunity to take advantage of the 5.99 mortgage rate on Friday? Well, no worries. There's going to be plenty of more opportunity in 2026. I'll explain. But first, let's take a look back at how 2025 ended. We're talking about the residential real estate market here in Columbia County, New York. So the median sale price in December was $565,000, which was down 11% compared to the previous December. At year end, the median sale price is $539,950, which is up 7.5% over 2024. December was another big month for closing. 62 homes sold in December, which is 16 more than December of the previous year, but 4 less than the month of November. So at the year end, 574 homes sold through December, which was an increase of only 18 sales or 3.2% compared to 2024. The number of sales was actually in decline for most of 2025, but the last 2 months have made up the deficit and hopefully is a good sign for a new trend. 31 new listings hit the market in December, which is 12 less than last December and 15 less than we saw in November. Despite the seasonal decline we saw over the past few months, the number of new listings is actually up 1.4% compared to 2024. 47 homes were placed under contract in December, which is 4 more than the previous December and 8 more than the previous month of November. At the end of the year, we saw that homes going under contract for 2025 was actually up 5.9% compared to the previous year. Average days on market was 70, which is a decrease of 18 days compared to the previous year. The sale price to list price ratio was 96% in December, which is a 2.6 point decline from last December, showing price negotiations are happening and price growth is slowing. Coming out of December, there was 5.85 months of inventory available, which is down 10% compared to the previous December when there was 6.5 months of inventory available. But this is still considered a balanced market. Okay, fast forward back to today. The median list price today is $579,000. There are currently 218 homes on the market. 104 of those homes, or 48% of all inventory, is sitting between $300,000 and $750,000, which is where 48% of all sales have happened in 2025. 53 homes, or 24% of all inventory, is over $1 million, but this price range saw only 16.7% of all sales in 2025. On Friday, we saw mortgage rates dip under 6%, but by Saturday, they were back up above 6% again. Experts have projected that interest rates will remain stable just above 6% for most of 2026. But we saw on Friday that downward movement is possible. So if you want to be able to take advantage of that volatility next time, you have to get your ducks in a row. If you're shopping, you need to be pre-approved to expedite the process once you make an offer. If you already have a mortgage and just want to refinance, now is the time to get in touch with a lender so that the next time rates slide, you can take advantage of them. So there's a lot of talk about improving affordability in the housing market, everything from banning institutional investors from buying up single-family homes to Fannie and Freddie buying $2 billion in mortgage-backed securities to the latest threats yesterday from the DOJ against Jerome Powell, the Fed chair. Unfortunately, none of these actions actually address the supply issue with housing. In this region specifically, there is not large-scale housing construction, and there is a shortage of homes in the median price range or below in a lot of towns. Lowering mortgage rates makes purchasing homes more affordable on paper, but if more buyers are competing for the same housing stock, that actually has the potential to drive up prices, making things less affordable. So stable rates should encourage more sellers to enter the market, increasing available inventory. And this combination will keep prices stable, supporting a balanced housing market in 2026. So let me know what you think in the comments below.